Yo, what's up everybody? Mike the CPA here, coming at you with 5 must-know tax tips and concepts so you can be more successful when it comes to your finances. As a real-life CPA and a person who does YouTube part-time, I can tell you guys I receive comments over YouTube and questions at my day job on a very routine basis around these 5 tax topics we're going to discuss. I've never quite made a video like this, so if you find this video helpful, please let me know in the comments and let me know if you want to see more videos like this. Alright, I'm going to dive into it, but before we do it, I just want to take a moment to recognize and thank all the new subscribers. If you're brand new here, checking us out for the first time, greetings. My name is Mike, and we make videos here that cover finances, investing, and taxes to help you build wealth. If you guys don't mind leaving a like on this video, commenting on this video, sharing this video, or even subscribing to the channel, those are absolutely the best things you can do if you want to support my work and the time and effort I spend producing those videos. So appreciate you guys. Thank you so much for being here, and let's get started. All right, guys, the first thing we got to talk about is extensions, because there is a lot of misinformation regarding extensions, and I got to debunk this tax myth right now.
But let me hit you with some knowledge.
For some reason, people seem to think that if you're going to go file an extension, that the IRS is somehow going to target you or come after you.
Immigration?
Revenue.
Mrs. Rose, there are people here from the government.
You know, come into your house, steal your stuff, kick your dog, steal your cat, whatever. Nothing could be further from the truth, ladies and gentlemen. I don't know why it is, but I've had several clients nearly freak out on me, almost go into a rage mode or get super panicked if I told them that we would have to extend their tax return because we don't have all the information to prepare it. So with an extension, what you're actually communicating to the IRS when you file that extension is you're saying to them, I need additional time to gather my documents to report my information correctly on my tax return, because I don't want to rush it. I don't want to give you a incomplete tax return. So when you give the IRS an extension, when you file an extension, you're actually telling the IRS that you want to be responsible with your taxes and you don't want to file late. The IRS doesn't care, ladies and gentlemen, about whether or not you file an extension. The only thing the IRS really cares about when it comes down to the traditional tax deadline of April 15th is they want their money. That's all they care about at that point. So, as I've mentioned in a previous video I've done on extensions, which I can leave those links below, if you think you're gonna owe money when you go to file your taxes, please do your best job to estimate what that amount is on you owe. And you might do that by actually working up your tax return as much as possible and submit a payment with the extension. There are a couple different ways you can file for an extension. One is via a paper form like you're seeing on screen, and you would mail that in to the address specified in the instructions with a check or without a check, depending upon whether or not you think you need to pay. The next way to make an extension, I consider this to be the easiest way in my opinion, is to actually go to the irs.gov website. You can do make a payment, and once you get to that screen, you can select what tax year it refers to. You can, on the drop down, even though you're not seeing it here because we're past the whole extension date at this point in 2020, as I was filming this in August. Normally though, there would be an option to select an extension payment. You would follow the couple of easy steps and you would be done and have filed an extension at that point. Super easy to do online. Next up, pop quiz for you guys. What do you think is better for taxes? Tax credits or tax deductions? Which one will help you preserve more of your hard-earned money when it comes to taxes? If you said tax credits, you're right. Tax credits actually reduce your net tax liability dollar for dollar, while a tax deduction cannot do so. The example you're seeing on screen, let's say a person makes $1, and let's say their marginal tax rate or the tax bracket they're in is 22%. So for every dollar of tax savings or every tax deduction they can get, it's gonna save them a net 22 cents in tax. While if they had a tax credit, let's say the child tax credit, for example, that's gonna save them the entire dollar and not just 22 cents. Always remember that tax credits are superior to tax deductions. There are a lot of misperceptions around this next tax topic, and that is mortgage payments, car payments. Are they tax deductible? A lot of people think they are, but that is incorrect. But wait, Mike, what if I'm using the house to be rented? And what if I'm using my car for business? Isn't my payment deductible then? And how are all these people online telling me that they're writing off their car, they're able to deduct their home? How is that a possibility then if these payments aren't deductible? When you're paying a mortgage or a car payment, each payment, a portion goes to principal and a portion of that payment goes to interest. If you're using your home for a rental, for example, the interest is deductible that you pay on Schedule E, tax form Schedule E. The payment, however, the principal portion of that payment is not deductible. But that does not mean you cannot deduct the cost of your home. Because you're renting it out, because you're using that asset for business purposes or rental purposes, you can actually deduct the cost of the home, the principal value of the home, through a tax concept known as depreciation, and you can deduct that over 27.5 years. You can check out one of my basic tax videos on real estate. I will link that below if you would like to learn more about that. For your vehicle, if you're using it for business, the concept is very, very similar as we just discussed as it is for real estate. It follows a different set of depreciation rules, but the concept are very similar, and you might be able to deduct a portion of your interest you pay on the vehicle depending upon how much you use it for business purposes. If you're not renting your home out and you're just living in it personally, the only thing you might be able to deduct is your mortgage interest, if and only if you're able to itemize your deductions. For your car payment though, there would be no deduction whatsoever if you're not using it for business purposes. All interest payments and the cost of the car is totally on you. No tax deductions are allowed. Bummer. Do you find yourself falling behind your taxes, or you're afraid that might be happening to you? I have people messaging me all the time, especially over YouTube. Mike, I just made a lot of money in my business. Hey, I just sold off a lot of investments. Hey, I got unemployment coming in, and I noticed they're not withholding anything on my unemployment checks. What the heck do I do? I'm afraid I'm gonna end up owing the IRS a bunch of money. Can you help me? The easiest way, in my opinion, to get caught up quickly on your taxes, and this could just be a rough estimate number, guys, but is to make a federal tax estimate payment. And I have 3 videos that cover that in great detail. I will leave them linked below. You can check them out, and it will walk you through a lot of the rules around estimated tax payments, how to make an estimated tax payment step by step. Super easy, only takes a few minutes. And I just suggest usually just estimating roughly without trying to fill out a whole tax return and calculate the exact numbers of roughly what you might owe. So if you're in the 20% tax bracket, or the 22% tax bracket, for example, and you make $10,000 in unemployment, multiply that amount by 22% and send that net 22% amount to the IRS in the form of a federal estimate payment, and that's going to help you keep current on your taxes. If you live in a state where that income might be taxable as well, depending upon the kind of income it's at, you usually have to make a separate tax estimate for state purposes to be caught up on your state income taxes. Keep those 2 concepts in mind, and you'll realize after watching some of my other videos, keeping current on your taxes is not that hard. You have nothing to fret about, even if you have yet to adjust your withholdings. Lastly, the last tax knowledge bomb I want to leave you guys with today also deals with estimates. The question is, when should I start to consider making estimated tax payments, Mike? I don't know when I should actually start thinking about this. And the answer is, there's not a precise answer, but if you believe that when you go to file your tax return, you're gonna owe more than $1,000, whether it's $2,000, $3,000, $4,000, $5,000 or more, at that point, when you think that's gonna be the case, then I would consider making estimated tax payment. By getting caught up on your taxes with an estimated tax payment, it's going to potentially reduce any interest or penalties you may incur for not having paid in those taxes timely. Also, you won't owe a bunch of money when it comes time to file your taxes around April 15th. That's always a nice perk. The good news is you can make an estimated tax payment on any day of the year, and you can just simply do so through the irs.gov website. However, the IRS does have recommended payment guidelines of when to make estimated tax payments. Those include April 15th, June 15th, September 15th, and January 15th of the following year. For example, a person who thinks they might owe $2,000 when they go to file their taxes can make an estimated tax payment well ahead of time on any given day, or they may choose to break that payment up into 4 equal amounts of $500 and pay on those recommended due dates we just described. Alright guys, well I think I'm going to stop the video here. I don't want to make this too long. Hopefully I've armed you, I've equipped you with some new tax knowledge so that you can go out there in the real world and apply this and not be confused around these concepts any longer. If you want to see more videos like this, please, really do let me know in the comments below, because I had a lot of fun making this one, and there's a ton of concepts I can share with you very quickly over YouTube in these educational videos. Alright guys, don't forget to like, comment, share, subscribe, and I will see you in the comment section. I really do hope you have a wonderful week. Stay safe out there, live life uncaged, and I'll see you in the next episode. I love y'all guys. Peace.